Welcome to another episode of Mere Finance. I'm going to discuss oil because oil has been going in the downtrend. It just crossed 55 and it might be heading to under $50 per barrel. So we're going to analyze the implications that it has not only to Texas, which is the biggest producer and the energy capital of the world, but also the US. So before we start, don't forget to subscribe. So oil overnight today, May 4th, 2025. It just touched the lowest price since February 2021 at 56, almost 55 coming at some point. And it has a lot of implications, not only in inflation, not only in the economy, but also in state revenue, in jobs, and could signal some trouble, actually, because we start seeing that oil also has a direct correlation with the health of economy. Too high is too bad, too low is too bad, apparently. So we're going to talk about Texas, because Texas is the second biggest economy in the US after California. So it has a lot of important output, economically speaking, also big population. So oil and natural gas industry are an integral role in Texas economic landscape, not only in the economic part, but also in the state revenue. And for those that follow the muni markets, Texas bonds are usually rated higher than the US bonds. Direct employment, almost 500,000 jobs. Upstream employment, which is basically the extraction of gas and oil, 205,000 jobs. The average annual wage, which is way above the Texas average wage, is 128,000. This is almost double the household income average in the US. Also, as of Q3, which we don't have recent figures, is $14.5 billion that energy companies pay, and all of these wages go into the economy in terms of consumption and debt. Total payroll was $62 billion, so we're probably seeing in quarter one of 2025 around $15 billion, and it's 3.4% of the share of Texas workforce, and its total jobs supported around 2.8 million. So indirect or direct are 2.8 million jobs, and it has a gross regional product in Texas of 366 billion, and the Texas local and state governments receive almost $28 billion in revenue. So it's huge there. And if it's huge in Texas, Texas also plays a huge part of the U.S. economy, because as we say, the second one. And then you have the Oklahomas, the Louisianas, that also have a lot of relationship with oil. So in what the story tells us, at these prices, inflation is basically, the story is gone, right? Because oil has a direct impact in every transportation cost. It also affects not only your cost of transportation, but also affects how people driving habits come. Driving also affects tourism and consumption. So it's both an input cost, but it's also an expenditure on households. And we went to Science Direct. It showed that in the last 5 years, gasoline prices shocks explain approximately 66% of the variation in headline inflation over a 1 month horizon. So it's by only, if the oil moves this way, CPI gets a 1 month period by only affected, 12% in a quarter, so 3 months, and 22% over a 6 month horizon. So it has a direct impact. Basically, I think it's $1 lower in oil is around 20 bips less in inflation, which is good, right? That's what Donald Trump and Biden want. But then when it turns deflationary, it can affect the economy as well. So Trueflation, which has a different methodology than the Bureau of Statistics for CPI, shows that this month we have a 1.45. This is lower than the 2.5% that CPI show. Also, it shows that transport is 19% of the CPI Trueflation index. So in this case, 0.24 as of yesterday was the inflation in this specific area. Suppose tomorrow when we refresh the data, we're going to see probably in the negative side, ISO oil just went under 56. So big component there. And this is the only problem. For the producer, it creates some challenges. The challenges are your costs become higher than your sell price. We saw this in 2020 when oil went negative because producers just needed to dump it. So we're going to focus here on the Permian, which is the general one. That's 50 or 54. That's usually the break-even price for new wells. But also the U.S. shale average is usually the industry average for the really new wells. So it's close in the 50s. So now that we touch 56, basically we're going to start seeing some companies struggling. I think if it goes under 50, layoffs begin. And that also affects a lot of the economy in Texas, but also in the U.S. So has also some repercussions, especially in a country like the U.S. where consumption is so important. And now in the macroeconomic part, who is going to win the lose? Well, Russia is a loser, cannot sustain a war where most of your money comes from oil. If oil prices go down, you don't have money to finance your war. That's why Russia has been able to sustain so long, even with the sanctions, because they were selling gas and oil at high prices to the European Union and other countries. So that's one part. China, the UA, and the India are the winners. China and the India because they are producers, and the UA because it's a direct consumer of Russia, all not directly, but in other ways. Then also the US. I think the US will be neutral, although economically speaking, as we say in Texas, we could see some layoffs, and that could mean a recession. But in the macro panorama, the US is the biggest producer of oil currently, so it doesn't really affect them. But Saudi Arabia can sustain this, because Saudi Arabia, I think cost of production is around $25, so they can really sustain this. And then we can see the big companies like Exxon and Chevron, they will go on a buying spree, because as we said, the small players in the industry cannot sustain these levels of cost. So for sure, oil will lower inflation. Maybe Powell will cut rates to catch up. Then we'll have a happy market, because then we see valuations going up, or maybe a recession is coming. Then we have to see how it reacts. I worry that this deflationary pressure will probably make a lot of hits in the employment market, so the labor market. But I think also the consumer will be happy that gas prices go down. So let's see how it plays out. We have seen a very interesting 2025 with tariffs. Market went down almost 18%, recover as of this week. We also see unemployment still a little shaky. GDP contracting because of less government spending. A lot of layoffs in the government jobs. So definitely a change in the dynamic of the economy. I think we're going to see a quarter of a lot of changes. And then after probably quarter three, we're going to see the real descent and Trump economy. And hopefully it's a good one with more affordability in prices, in houses, and a stronger job market for the national citizen. Thank you for watching, and let us know what you think.